we are chopping sideways. So that's the 10-year that would really define a confirmed breakdown. I'll put it on a monthly to show you a cleaner version. So do you see this? It's not even clean, but I'm going to try and figure this out. Let me get rid of that. Thank you. All right. So see this? This is what my note, literally, that's it. We're done. August 25th, 2020. Bonds are done going up. The end. Done. Firmly confirmed to me. We're done. Okay. So now here's the 10-year. Pull back. Digestion took forever. But then here we absolutely, January of 2022, we started moving higher. January of 2022, February of 2022, we really confirmed higher. And then March of 2022, we exploded higher. But this was the big one. We had a massive April 2022 yield curve inversion, which, by the way, has been going on for 1 year until just yesterday, Monday. We had a massive, look at this. I'm going to go back to the other chart for just a second. We had a massive, look at this, biggest reversal in the history of stirs ever. So this was negative for 1 year. And we went, sorry, this is the 2 and 10 yield curve, not negative for 1 year. Ignore that. This was when the interest rates dumped, right? Very strongly on recession risk and Fed reversal. And we just literally did a mean reversion, total trap. I'm not sure how many hedge funds or fixed income groups could manage that standard deviation move, but it's got to be at least 2 standard deviations, at least. Anyway, going back to 10-year, this is when everything changed in April. Massive yield curve inversion, end. All of my other intermarket triggered, but we pulled back and supported here, 2.6. Okay, then we gapped up on a monthly. I'm on a monthly. Massive move higher in September. Why? September of 2022, we had already had June CPI at 9.1%, big, huge move higher, all the way up to 4.33. October intervention, central bank coordinated intervention, 1 trillion in central bank intervention, only brought it down 100 basis points to 3.33, literally, exactly. And this is resistance. So this 4.1 or 3.9 in a quarterly, which is basically March in 2 weeks. Are we going to get above it? No. In fact, it looks like we're creating a bearish engulfing on a monthly. I'm bearish now. I am deflation girl now. I was inflation girl here for a really long time until Sunday. And Sunday, I said, nope. Sunday, the Fed pivoted. It was an implicit one, but banking broke and markets are in trouble. They just don't know it yet. So this is right now, we could go another month sideways, maybe, but I just think we're in trouble. I think this is now a deflation impulse. So that means that in 4 to 6 months, this could be all the way back down to 2.6, but not all at once. And right now we're still above the 10-week, right? That's been absolutely the trend. Very strong. We have not broken, monthly. We have not broken the quarterly. Like literally there's work to be done here. And this took 1, 2, 3, 4, 5 months. This has been coming back down since October. That's 5 months. So no, this is going to take a while. But yeah, your question is a really good one. Where are we? Most likely in the next 4 to 6 months, I would say yields are lower, bonds are higher. And I had not that opinion until Sunday. You missed it or not, I'm not sure. But when we break below 3.33, again, I'm looking at a kind of a different time frame here, which is my fear is that we're going to engulf in a bearish engulfing on the monthly within the next 2 weeks, which means that the low of 3.33, where we exactly got protected, remember that? And then gapped up, it was extremely bullish. Everything changed on Sunday at 6 o'clock. everything changed. So no, I think we're actually going to take that out this month. We might close around 3.4, but I think that this is going to get taken out in the next 2 weeks. This is just looking way too bearish. I think we're going to engulf that prior bar, which means we will test below 3.33, which means TLT is a short term. Well, I mean, it's already been bouncing. That's monthly support. We've already engulfed this one. The high is 109.10. The prior high was 109.35. So no, we have not engulfed it yet. So this likely has another 2.5 points higher. I know I had only measured move of like 106.5, 107 because of the 200. I think it's going to go to 109. So you'll have a lot of risk off if when dollar gets above 105.66, gold is already risk off. 1865 was my level on gold. So we're already there. And then of course, if bonds get above that 132, which is TNX getting below. So basically, I think we're going to tag 135 ZB in the next 2 weeks.